If you are wondering what retained earnings is, and if you find a statement of changes in equity confusing, this video will help you make sense of both of them, so you can better understand how companies account for equity. Retained earnings is the amount of the profits our firms have retained in their business and have not transferred to other reserves or paid out as dividends to equity investors. Quite a few people can get confused about the differences between provisions and reserves. The key difference between them is that provisions are liabilities and reserves are equity. With a liability, there is an expectation of the outflow from a firm in the future of economic benefits arising from a present obligation. With reserves, there is no such expectation of a future outflow of economic benefits. Rather, reserves represent the results of past value creation activities of a firm that are now used to support future value generating activities of our firm. Let's now look at the statement of changes in equity. A statement of changes in equity shows the changes over a period for each item of equity and total equity. Each column in a statement of changes in equity shows the opening balance of each item of equity, in what ways the item has changed during the period, and its closing balance at the end of the year. Profit or loss from a firm's income statement is transferred to retained earnings. Other comprehensive income goes directly to various reserves. We can see all of these movements, as well as any new share issues, share buybacks and dividends, in our firm's statement of changes in equity. The statement of changes in equity shows us how equity and the parts of equity have changed during the period. This can help us better understand how a firm has added or destroyed value for equity investors during the period. Part of the story of value creation in a firm is other comprehensive income. This aspect of value creation does not go through a firm's income statement and then into its retained earnings in its equity, but rather goes straight to reserves in equity. Examples of other comprehensive income include changes in revaluation surplus for property, plant and equipment and intangible assets, gains and losses arising from translating the financial statements of foreign operations, and gains and losses on various derivatives. For further information on retained earnings and statement of changes in equity, go back to Chapter 8, Section 8.2 in the study guide, and also review the Equity Weekly questions. Also answer, write and rate questions on equity in Peerwise.